Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. It's great to have you with us today. We're going to take a closer look, really dive into the semiconductor industry's pulse. Our focus is KLA Corporation, really a central player, and we're digging into the details from their June quarter 2025 performance. Now, if you've ever tried to read an earnings call transcript, well, you know it can be dense. Lots of financials, lots of technical jargon. So our mission, like always, is to cut through that, to transform it into clear, high-impact insights for you. We want to pull out the most important bits, maybe some surprising facts, and figure out what it all actually means for the broader tech landscape.
Exactly. And KLA isn't just another semi company. They're really foundational. They're process control solutions. We're talking about the tech that makes today's most advanced chips possible, period. They're all about precision, quality, yield. And that's becoming, well, even more vital now with this AI explosion. So yeah, we'll look at the numbers. They're impressive. But what's really compelling is looking beyond them, seeing the strategic shifts, the underlying trends. It's kind of like seeing the future of computing through the tools making it happen.
Okay, let's jump right into the financials then. Because KLA's results for the June quarter were definitely robust, strong across the board. Revenue hit $3.175 billion. That was right at, or maybe even a bit above, the high end of their own guidance. And profitability. Non-GAAP diluted EPS came in at $9.38. GAAP was $9.06. Again, meeting or beating projections.
Solid numbers. Very solid.
But maybe the most eye-catching figure, kind of a milestone for them, was the record free cash flow. First time ever, over $1 billion in a single quarter. $1.065 billion, actually.
Wow, that's significant.
Yeah, and if you look at the last 12 months, $3.75 billion in free cash flow. That's a 31% margin over that time. So like you said, these aren't just big numbers. They really paint a picture about where cutting-edge tech is going and KLA's role in it.
Absolutely. And what's fascinating is how tightly connected these financial wins are to the challenges of building AI infrastructure. KLA's strength isn't just general market demand, it's their unique, absolutely critical position right at the heart of this AI build-out.
How so, specifically?
Well, think about AI. It needs chips that are incredibly complex, designs are harder, product cycles need to be faster, the wafers themselves are much higher value, and there's this huge growing demand for advanced packaging.
Right, putting different chips together.
Exactly, and the old ways of manufacturing, they just aren't precise enough for this stuff. That's where KLA comes in. Their process control tools are like the eyes and ears for the fab. They help customers navigate making these incredibly tricky chips. It's crucial for debugging problems during the ramp-up phase, when a new design is first being scaled, like an ICU for new chips.
Okay, catching problems early.
Yes. And then in high-volume manufacturing, especially when fabs are making lots of different designs, a high-mix environment, these tools are vital for optimizing yield, getting as many good chips as possible. Without that control, making AI chips economically just wouldn't work at scale. It's not just making more chips, it's making these super precise, high-performance chips reliably.
That makes total sense. So following that, KLA's leadership actually called out specific areas driving this growth, right? It sounds like certain parts of the semi market are acting like, well, engines for KLA.
That's a good way to put it, yeah.
They pointed to three main areas for the strong June quarter. First, leading edge logic, the really advanced processors, the brains of AI. Second, high bandwidth memory, HBM. That's crucial for feeding data to the AI chips, right? Like a data superhighway.
Exactly. Can't have one without the other performing well.
And third, their advanced packaging capabilities, integrating these complex chips together efficiently. And the common thread KLA mentioned. It's all driven by prioritized investments specifically for ramping up AI capabilities.
Right. It's not just a rising tide lifting all boats. It's targeted AI-focused spending that directly benefits KLA's specific tool set.
So it shows that direct link from the big AI trend right down to KLA's bottom line.
Precisely. Which brings us to this whole idea of process control intensity.
Right, the amount of inspection and measurement needed.
Yeah. And why is it becoming even more essential now? Historically, process control intensity often tracked with lithography shifts, like when EUV came online, often driven by maybe one big microprocessor company pushing the envelope.
Okay, a new printing tech meant more checking.
Kind of, but what's really interesting is that historical link. It's basically broken down over the last few years. We're seeing totally new drivers making process control more critical than ever before. It's a paradigm shift.
Okay, so what are these new drivers then?
Well, first, there's just this proliferation of advanced designs. It's not just one or two companies at the leading edge anymore. Many more players are designing complex chips, and that creates way more variability in the fab.
More designs, more potential issues.
Exactly. And it means more reticles, those masks, for printing circuits. It makes managing these high-mix fabs, juggling all these different designs, much harder. Needs constant, precise oversight. Second, the die sizes for AI chips are just huge. Physically bigger, way more complex.
Right.
And that introduces new challenges for defect density. Imagine a tiny flaw on a huge, super expensive chip. It can kill the whole thing, so you need much more rigorous inspection all the time.
Makes sense. What else?
Third, there are big architectural changes in the chips themselves. Things like gate-all-around transistors, fundamentally harder to build without extremely precise control. New failure points, basically.
Okay.
And finally, a really big one. Advanced packaging integration, stacking and connecting multiple valuable chips together.
You mentioned this reduces the need for some other equipment.
Yeah, potentially some steps in the front-end process. But it massively increases the need for process control. The connections are microscopic. Any misalignment, any defect can ruin the entire package, which is very expensive.
So inspection and measurement become paramount there.
Absolutely. So for a company like KLA, focused purely on process control, this is, well, a perfect transition. These new drivers mean customers have to invest more in these solutions.
So it fundamentally changes how these fabs operate day to day. Sounds like that old ramp then run model doesn't really apply anymore.
That's exactly right. Historically, you'd see process control intensity spike when debugging a new node, then maybe ease off in high-volume production once things were stable.
Get it working, then scale back to checking.
Kind of, but now, with so many designs, different process flows, continuous improvements, fabs are basically running multiple ramps all the time.
So the high demand for process control just stays high.
It's sustained. Plus, these advanced wafers are incredibly valuable. Fabs are constantly adding more process control tools to squeeze out every last bit of yield, even on older nodes. The cost of a failed chip is just too painful.
Can you give an example?
Sure, think about reticle inspection, those masks. Historically, 100% inspection, always, because printing a defect everywhere, catastrophic cost. Now, advanced packaging is seeing the same thing. The packages are so expensive, manufacturers are moving to 100% inspection rates for them too.
And those high rates don't drop off later.
Exactly. It's continuous, intensive quality control, driven purely by the value and complexity. It's a complete rethink of quality management.
Okay, so connecting that to KLA's business, it tells us where the bottlenecks are, right?
Yeah.
Which parts of their portfolio are seeing the most action?
Precisely. And there's a clear difference between their inspection and patterning segments right now. Inspection, especially optical pattern inspection, has been incredibly strong, up something like 50% year to date.
50%? Wow.
It's essential for things like gate-all-around, which needs super precise defect detection. And also, those high sampling rates needed for advanced packaging challenges. That's a huge driver.
Okay, so inspection is booming. What about patterning? That's metrology, reticles.
Patterning's more mixed. Optical metrology, for instance, has been a bit weaker. It's closely tied to advanced lithography adoption, and that's been a bit slower from customers recently.
So less demand for those specific tools.
Right. But within patterning, reticle inspection, even though it can be a bit lumpy with big orders, is actually expected to have a record year in 2025.
Why the strengths there?
Several things. Demand from new mask shops, especially in China. Lots of requalification needed in fabs because of all the new designs. And just the need to inspect those critical single-die reticles perfectly.
Okay. And film measurement.
Film measurement, which controls layer thickness, is also expected to do better than the overall market this year. So while one part of patterning is softer, the overall process control intensity push, especially from inspection and reticle inspection, keeps driving things forward.
Got it. Let's drill down into HBM high bandwidth memory. You mentioned it's a critical growth engine. Why does it need so much more process control?
Yeah, HBM is really interesting. It's not just more memory. It's memory built to extreme specs for AI. And that demands new levels of precision. There are a few reasons why intensity is higher. First, the HBM dies themselves are more advanced, they're larger, and they're much more valuable. They have really complex circuitry, especially around the edges of the base die that controls the stack.
Okay, more complex, more valuable.
Second, there's less redundancy built in compared to traditional memory. A small flaw is much more likely to kill the whole die. They sacrifice redundancy for performance.
No backup pathways.
Pretty much.
Yeah.
And third, think about where these go. Into incredibly expensive AI systems where they have a really high duty cycle. They're working hard constantly.
Right, they can't afford failures in those systems.
Exactly. A failure means downtime, lost performance, huge costs. So customers are dramatically increasing inspection during development and during high-volume production. They need every insight they can get. Defect levels that might have been okay before are just not acceptable for HBM. They
Yeah.
need more coverage, better tools.
So that translates directly to more process control intensity.
Absolutely. It's a major driver.
You mentioned quantifying this impact earlier. Can we put some numbers on how much more valuable KLA's tools become for HBM?
We can, actually. It gives good perspective. Remember when EUV lithography first came into DRAM manufacturing?
Yeah, the advanced printing tech.
Right. Before that, process control was maybe, say, 9% to 10% of total wafer fab equipment spending, WFE.
Okay.
When EUV was introduced for a few layers in DRAM, that intensity stepped up by about 100 basis points, so 1 percentage point, maybe 10, 11% of WFE.
Okay, a noticeable jump.
Now, HBM adds another incremental 100 basis points of opportunity on top of that.
So HBM intensity is roughly 200 basis points or 2 percentage points higher than DRAM was before EUV.
That's the idea, yeah. It really underscores how the specific challenges of making HBM bigger dies, tighter specs, high cost of failure directly increase the value and necessity of process control. Customers are willing to invest more upfront in KLA's tools because it pays off in yield and reliability for these critical components.
That's a very clear way to see the value shift. Okay, let's pivot then to advanced packaging. This seems like another area just exploding for KLA.
Oh, absolutely. It's remarkable growth. They just significantly revised their forecast upwards for advanced packaging systems revenue.
What's the new number?
They now expect it to exceed $925 million for calendar 2025.
Over $925 million. Wow. What was it before?
The previous estimate just last quarter was $850 million. And compare that to 2024 when it was over $500 million.
So that's an 80% year-over-year increase from 2024 to 2025.
Exactly. 80%. It's huge growth. KLA is calling it the third leg of growth right alongside leading-edge logic foundry and HBM.
A third pillar for the company.
Definitely. It shows they're not just benefiting from trends, but are really enabling these critical shifts in how chips are built.
So what's driving this massive upside in packaging? Is it just the AI ramp? Or is KLA doing something specific?
It's really a combination. First, yeah, KLA seems to have the right products shooting the market just as customers need them for these complex packaging challenges. They've developed solutions specifically for this. Second, they're getting real momentum. Customers are adopting the tools, seeing value. And third, yes, it's absolutely tied to the broader AI infrastructure ramp, which relies heavily on advanced packaging.
You mentioned earlier this growth is somewhat outside of WFE dynamics. What does that mean?
It means the growth isn't just tracking overall equipment spending. KLA's share, or intensity, within the packaging segment itself is growing significantly faster than the overall WFE market. It's a distinct growth driver for them.
So they're capturing more value within that specific segment.
Right. And they seem to think it's just the beginning. Their leadership said they believe they're closer to the beginning of this trend than at the end of it. Suggests a long runway.
Can we quantify their intensity increase here too?
Yeah, they give a good illustration. Just a few years back, maybe 2022, their process control intensity in advanced packaging was around 1%.
1%, okay.
Now, it surged into the 5% to 6% range, a 5- or 6-fold increase in their footprint in just a couple of years.
That's incredible. Where are the share gains coming from mainly? Logic or memory packaging?
So far, most gains have been in logic-related packaging, like co-packaged optics. But they are seeing increasing momentum in HBM packaging, too. And importantly, this area is very defect-loaded. It leans heavily towards inspection rather than just metrology.
Because of the high value and need for high sampling rates.
Exactly. Missing one defect on a complex, expensive package is a big problem. So yeah, it really highlights how value is shifting in the manufacturing chain, and KLA is right there.
Okay, let's bring this back to the overall company health. How are they using this success to reward shareholders? What's the capital return strategy look like?
It looks pretty strong, reflecting that robust free cash flow we talked about. They're clearly committed to returning value. They just announced their 16th consecutive annual dividend increase, up 12%, which is substantial, to $1.90 per share quarterly.
16 straight years of dividend growth. That shows consistency.
It does. Predictable income for shareholders. And alongside that, they also authorized a new $5 billion share repurchase program.
So they're buying back their own stock, too.
Right. Suggests they think it's undervalued or a good use of cash. In the June quarter alone, they returned about $680 million total, mostly buybacks, but also the dividend payment.
And over the last year.
Over the last 12 months, it was just over $3 billion returned to shareholders. So yeah, they're confident, generating cash and sharing it while keeping a healthy balance sheet.
Sounds financially disciplined. Now, looking ahead, what's their view on the overall market, the WFE outlook for 2025 and maybe even 2026?
All right, the WFE outlook. For 2025, they're sticking with their original forecast. Mid-single-digit growth for overall WFE, starting from that roughly $100 billion base in 2024.
And what's driving that growth in their view?
Mainly leading-edge foundry and logic investment, plus memory, driven by AI primarily, and also premium mobile demand.
Okay, but you mentioned an offset.
Yeah, the offset is lower overall demand expected from China this year. But even with that, KLA is confident they'll outperform the overall WFE market growth in 2025.
Outperform. Why?
Because of their strong momentum, specific market share gains they're seeing, and that higher process control intensity we keep talking about, especially at the leading edge, they're capturing a bigger piece of the spending pie.
And any hints about 2026?
Early signs are positive. They mentioned customer discussions are constructive for growth, and they specifically talked about a broadening of investment expected in 2026.
Broadening meaning?
More customers moving to the leading edge, not just the usual suspects. Plus, that continued proliferation of many different advanced designs. All of that should drive sustained demand for their kind of specialized tools.
Okay, let's dig into that China dynamic a bit more. You said it's an offset for 2025. How much is their China business expected to drop?
They expect China to be about 30% of their revenue in 2025. That's down pretty significantly from 41% in 2024.
30% from 41. Okay. Is it declining through the year?
Actually, the first half was lower. Q1 was 26%, Q2 was 30%. They expect the second half to be sequentially higher, but the full year should average out around that 30% mark.
And what does that mean for WFE investment from China for KLA?
They see China WFE investment for them being down maybe 10% to 15% overall in 2025.
And beyond 2025.
Likely continued headwinds for China in 2026 too. It seems like a normalization after 2 years, 23 and 24, where investment was unusually high, mostly focused on older legacy chip technologies. So yeah, a definite rebalancing happening globally.
That leads to thinking about other global factors. What about gross margins and things like tariffs? How are those playing out?
That's a really important question now. KLA is forecasting their overall gross margin for calendar 2025 to be around 62.5%. But a new factor they and the whole industry are dealing with is global tariffs. They estimate tariffs will be a headwind of about 50 to 100 basis points to gross margins.
0.5% to a full % drag on margins? That's not insignificant?
No, it's not, especially since it wasn't really a major factor before, so companies have to adapt.
How's KLA mitigating that?
They're working on several things, using free trade zones where possible to reduce direct tariff costs, changing internal business processes, optimizing supply chains and logistics for this new environment. And interestingly, they're looking for spots where the added tariff cost actually makes investing in certain productivity improvements more attractive.
How so?
Well, if a process improvement lets them avoid importing a component that now has a high tariff, the payback on that improvement suddenly looks much better.
Ah. Okay, so they're actively adapting their strategies.
Exactly. It's a dynamic situation, requires agility. They plan to update as things evolve, and their mitigation efforts mature.
Okay, one last financial point.
Yeah.
Backlog. You mentioned it's normalizing. What does that really signal about the business flow?
Yeah, the RPO, or revenue purchase obligation, basically their backlog is coming down from an 18-month high. It's now in a more typical 7 to 9 month range, around $7.9 billion.
And this isn't because of cancellations?
No, they emphasize cancellations are rare. It's more about the type of orders changing. Before, they had long backlogs, partly due to new greenfield projects, brand new fabs needing slots way in advance.
Okay.
Now it's shifting more towards their established long-term customers who have shorter, maybe 6 to 8 month lead times because their needs are more predictable. Plus, that fast-growing advanced packaging business usually runs on even shorter 2 to 3 month lead times.
So it's actually a sign of things returning to more normal, predictable business patterns.
Exactly. More typical order-to-shipment timing for most of their business. It reflects a more mature, stable demand environment in some ways.
And amidst all this, what about their service business?
Ah, yes, the service business. That's just a story of incredible consistency. It just marked its 52nd consecutive quarter of year-over-year growth.
52 quarters straight. That's 13 years.
13 years, yeah. And it's expected to keep growing sequentially, too. It provides this really stable, recurring revenue base.
Driven by the complexity of the tools.
Right. The tools are getting more complex, customers need them running optimally for longer, so the demand for KLA's expert service just keeps increasing. It really shows the value of their huge installed base.
Okay, so wrapping this all up,
Mm.
it feels like the core story is KLA's strong performance is fundamentally tied to AI, right?
Undeniably. AI is the major undercurrent.
We've seen that reflected in the financials, the demand for leading-edge logic, HBM, and especially advanced packaging. And we talked about that really profound shift in process control intensity. It's not just about litho anymore. It's about design complexity, die size, packaging.
Yeah, the drivers have fundamentally changed, making process control more valuable than ever.
And we saw how KLA is navigating the market, the China shift, tariffs, while still delivering growth and returning capital. The big takeaway seems to be just how foundational their tech is for the future of computing, especially with AI pushing everything harder and faster.
Absolutely. And connecting it to the bigger picture, what this all suggests is maybe something quite profound for the industry. As chips get ever more complex, more valuable, more critical, the inherent value of getting it right, ensuring that quality, ensuring that yield, it just keeps accelerating.
Making sure things work perfectly becomes more important than ever.
Exactly. And this increasing focus on precision, on defect control, driven by AI and advanced packaging, it could actually start to redefine the capital intensity of the whole semiconductor industry. We might see a future where a larger slice of the investment pie goes towards ensuring perfection in manufacturing, not just adding raw capacity. That fundamentally changes how chips are made and valued. Something to think about.
A fascinating thought to end on. Making things right becomes the premium. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.